Oh, hi. We're calling the Retirement Board of Allegheny County meeting to order. We'll stand for the Pledge of Allegiance. I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
And then a roll call vote? A roll call, no vote.
Ted Puzak.
Here.
Corey O'Connor. Here. Sarah Monrado.
Here.
Frank DeCristofaro.
Here.
Jennifer Liptak. Here. Sarah Roker.
Here.
Erica Bruslers.
Here. Are there any signups for public comment?
There is no public comment.
And for board approvals, we have the board meeting minutes from the February 15th meeting.
So moved. Second.
All in favor?
Aye.
Aye. Any opposed? The board approval of board minutes passes. Next are the financial statements as of January 2024, generated by the Controller's Office for pension fund assets, statements of changes in net plan assets, and the Retirement Board of Allegheny County balance sheet. Are there any?
So moved. Second.
Any discussion? All in favor? Aye.
Aye.
Any opposed? The financial statements are approved. The third item are invoices in the amount of $25,018.72 for March investment services. Can I have a motion to approve?
So moved. Second.
Any discussion? All in favor?
Aye.
Any opposed? And the approval of the March invoices passes. Next, we have retirement applications for March 2024 retirements. This includes 4 early voluntary and 8 full retirements. May I have a motion to approve by the board?
So moved. Second.
Any discussion? All in favor?
Aye. Aye.
Any opposed? The motion to approve March 2024 applications for 4 early and 8 full retirements passes. Item 7, we have an independent medical exam opinion for disability application approvals. It's one for member 096556 as recommended for a total and permanent disability. May I have a motion?
So moved. Second.
Any discussion?
No.
All in favor to approve this application?
Aye.
Aye. Any opposed? And the motion to approve this application for member 096556 passes. Next, we have reports. First is Walt Szymanski, manager of the retirement system.
Thank you very much. If you turn to your manager's tab in your board book, I'll highlight some areas on the dashboard. Retiree payroll is up 8% as compared to this time last year. Contributions are up 11.1%. Contributions refunded are up 30.91%. Life insurance paid claims are down 35.32%. Retirements are up on the year 20%, 72 this year as compared to 60 last year. If you turn to the next page, pension estimates are down 24.47%. Capital calls for the month were $467,345.18. I have the office budget there as of February 29th, 2024. Did there any questions on the dashboard? Okay, if there are no questions, I have 2 items, one for board approval and just one request for review. The first for approval would be requesting the board approval to adopt the chief executive's updated vacation schedule and proration of days for the retirement office staff.
So moved.
I'll second.
Any discussion on this matter? All in favor of approving the updated retirement schedule?
Aye.
Any opposed? And that motion passes.
Thank you. Second, for the board request, so the next month we'll begin the election cycle for the board member elected seat. I've included a draft of the timeline and the procedures. If the board could just review them over the course of the next month, and if you have any changes or suggestions to let me know prior to the next board meeting, I'll bring the final item for approval next meeting.
Motion approved, brief discussion. I just have a question.
Do we need a second to have a brief discussion? You have a brief
however you want to.
discussion.
Okay.
Yeah.
So when we do this, do we mail, everybody mails it in, or is there like somewhere at your office they can drop the ballot off at?
So the way it traditionally works is ballots are mailed out to active and retired members. They're required to turn it into the elections department.
Okay.
If we receive any into our office, we take them upstairs to elections. Elections actually performs the vote count. They also are the ones that decide the order when they roll the dice for the order of
So
ballot
in
petition too.
theory, somebody could just drop it off at your office and you would take it
They
off?
could, we
Okay.
take them upstairs. Yeah,
Okay,
we
just
do not-
because I know like we've had some issues with mail, it's so delayed now.
Yeah.
That if people, at least we could say you can drop it off at your office, you take it upstairs, that's fine.
Yep,
Okay,
and we'll always have two printed extra ballots in the office in case someone misplaces theirs too. They
Okay,
can pick
perfect.
one up and take it and fill it out later as well.
okay. Yeah, I just wasn't sure how it works here. Thanks.
You're welcome.
I had a question, or did you?
No, I don't know if I had to finish my motion.
I had a question on the materials for the petitions. Do we require a signature for who circulated the petition?
That we have never done, we can add it.
Yeah.
In the past, it was just the signatures, and then myself and the staff would review to make sure they're an active or a retired member.
Yeah, if we could include just a signature for who circulated it, I appreciate that.
No problem.
How many signatures are required on that?
60.
60?
Yeah, we came up with a method a few years back, so it's a percent of the number of active members. So we do, I think it's 0.5%, it should be in here.
Yeah, the math was in here.
Yeah, 0.5% of the plan participants. And we rounded down, so it was 60.63, so 60 active signatures will be required this year.
Any other questions? All right.
And then lastly, I just wanted to thank everybody who attended the training on Monday and all of our presenters. I think it went really well, and I appreciate the board's participation.
Yeah, and we very much appreciate that the session was put on, and thank you again to Member DiCristofaro for suggesting that and getting it moving.
I heard the food was good. I'm sorry I missed it.
Thank you very much.
Next on the agenda is a good time. All right, Brian Gabriel from our solicitor.
Thank you, Erica. The solicitor's report is current as of last Friday. I would note that the primary updates are at 1A, 1B, 3A, 7A, 7C, 8A, and 8B. Otherwise, I don't have any matters to bring to the board's attention or action items, but I'd be happy to answer any questions.
I'll just add that Brian did provide me a initial draft for potential future bylaws, and so we'll get those circulated to the board probably in the next week or two, and we can discuss at the next meeting and decide if we want to discuss it at large or move it to a committee. Are there any other questions for Brian? All right, thank you.
Thank you.
Next on our list is Chris Brokaw from ANDCO.
Well, thank you very much. If you turn to the section of the book, Reports and Co., before I get into to what we see, the details on the page, just wanted to mention, I don't know how closely you follow the market or watch financial news, but earlier this week, the Federal Reserve met, and what they announced was they were going to leave interest rates unchanged. And I wanted to make a comment on that because the interest rate, short-term interest rate that they set, as well as future interest rate expectations, are really critical for the performance of the fund. That is, when we look at 2023, and if you now turn to page 1 in the book, in 2023, especially in the book, page 1, the top chart on the right-hand side, you see various columns there. They represent different parts of the equity market. Growth was up 42.7%, growth stocks. So at the end of last year, there was an expectation that the Fed was going to lower rates 6 times in 2024, and that really drove the market higher, not just the equity returns, but also at the end of the year, fixed income returns. So everything was positive at the end of the year. So now, let's just say it's more neutral. And part of the reason is that the economy continues to grow, and the expectations last year for a recession are no longer present. So while that's good for the economy and also provides some support for the markets, at the same time, it means that there's a lower expectation for interest rates to decline. And that means, in simple terms going forward, rather than the straight up that we saw in 2023, we'll probably see some more ups and downs in 2024. And we'll see both of them in this report. On page 1, again, if you look to the left, the top left, you can see year to date for the first line there, the S&P 500 up 7%. So the stock market, large cap stocks in the US continue to move upwards. The third line down, Russell 2000, those are small cap stocks, positive, but only at 1.5%. And towards the bottom of that chart, MSCI EFA, second line up, those are international stocks, up 2.4%. So through February, positive performance in the stock market. Now, the downside that I mentioned, you can see that in the U.S. aggregate. So the next section of indices for the month, down 1.4%, and year to date, 1.6%. And that's due to rising interest rates over that period of time. So that really drives the negative performance in the fixed income market. And as I said, going forward, expectations of where the interest rates are going to land and how many interest rate cuts are really being priced into the market every day. So we did see the positive year-to-date results through February. If you turn to page 4 to make a few comments about your portfolio, the data we have here is through the end of January. And through January, the markets were not as kind as they were in the month of February. So you see the total fund performance for the month down a quarter of a point, 0.24%. For the trailing year, so the trailing 12 months, up 3.8%. So when we looked at the beginning of the year, the market coming off the very good 2023 gave back some of those returns. U.S. equity, large cap stocks, that was back on the first page, that 42% that we saw, large cap growth. Large cap stocks continue to post positive returns driven by, I may have mentioned in prior months, Magnificent Seven, Apple, Amazon, Facebook, Google, Tesla, Microsoft. What am I missing? NVIDIA, yes. So driving the markets higher in large cap, they continue to perform well. Non-U.S. markets, you see the negative performance for the month, pricing in again some of that. Some of the changes that we see regarding future expectation value outperformed growth in non-US markets as opposed to the US markets where growth stocks, like the technology stocks I mentioned, are doing very well. In your fixed income, positive results for the month. The strategies in your portfolio, more active and shorter term investments, produced positive returns in a market that saw a negative 0.27, negative 0.25% declines. High yield, essentially flat. The income from the high yield portfolio offsetting rising rates. Real estate, your portfolio, if you look out over the year, so for the month, the reports are delayed for real estate. So real estate and the index that it's reported against showing 0 for the month. If you look for the 1 year, your portfolio for the trailing year, negative performance, but about half of the index. Your portfolio is a bit more stable than the index. The index has a lot more exposure to office buildings and what's referred to gateway markets, so large cities, office buildings still suffering from the return to work scenario post-COVID. If we look at infrastructure relatively stable for the trailing year, plus 8.5%, most of the returns from infrastructure coming from income. Private equity, relatively flat. I see that Ed has a report, so I'll leave the comments for private equity for Ed's section of the report. And the liquid policy portfolio at the bottom, you see $35 million, and that performance is in line with its index, in line with the benchmark. Higher balance due to rebalancing in the portfolio. I have a few comments on the asset allocation, but before I turn there, I'll ask if there's any questions on performance. Okay. So if we turn to page 13, you can see the asset allocation of the portfolio as of January 31st. This is after the various rebalancing in the portfolio and really brings back all of the asset classes closer to their target allocations. You see in the top section in the chart, that bottom block, liquid policy portfolio, $35 million. That is really the source of funds when you need, it's very liquid portfolio. You can get the money next day. That's the source of funds when we need to raise funds for benefit payments. So that now has $35 million in it. The portfolio lined up relatively close to the targets, and so we do not have any recommended changes to the portfolio at this point. Any questions about asset allocation? Okay.
Oh, I have a question.
Yes.
So like when I looked, I noticed the high yield is below it's in the range, but below its allocation, and the total infrastructure is a bit above. Like at what points would one look at rebalancing?
Right. So we come with recommendations regarding rebalancing that are, let's just say, not automatic. So we try to be thoughtful about the rebalancing. And for example, at the end of last year, one of the reasons that we recommended bringing the equity, various equity investments, as well as the high yield lower, and increasing the liquid policy portfolio was to decrease a certain amount of risk in the portfolio. So we want to be thoughtful and not just mechanical about the rebalancing. So on a regular basis, and at least monthly at the meetings, we review the allocations and we'll bring forth rebalancing recommendations. So the direct answer to your question is unless it gets to the minimum, there's no automatic rebalancing.
so you're being thoughtful about it,
Yes.
and you opted because they're not at the minimum of the maximum to not do anything, or you looked at them and you said, oh, I think high yield's coming back, and we'll just leave it in there a little longer? Like what's occurring that's
Right.
making there be a recommendation or not?
So if I can try to speak more plainly, when we make the rebalancing recommendations, we are considering where the market is. So at the end of the year, or towards the end of the year, after significant positive performance in equity and high yield, we made the rebalancing recommendation to the liquid policy portfolio.
I think to specifically answer your question, we would recommend a rebalancing procedure where, when relative to where the assets would come from, rebalancing into high yield in this instance would be beneficial to the portfolio. So we would have to take from a certain asset class. Infrastructure's not liquid, the cash isn't available, so we can't just take from infrastructure and put it into high yield. So not only is it an absolute choice, sometimes it's a relative choice.
Thank you. That concludes my questions.
Thanks, Tim.
All right, what's next?
Any more questions? So one forward-looking item. I know at the meeting earlier this week, the education session, we talked about a number of things, including asset allocation. And so at a future meeting, I propose at the May meeting, I can bring an asset allocation that basically is going to look at your current allocation, compare it to a couple of different scenarios, and see if there are different changes, additions to various asset classes at the targets that would be beneficial to the portfolio.
Chris, I got a question. I'm going to track back here. As far as interest rates, when do you predict as far as what they're going to be in regards to reduction?
Right. So what I was referring to is information from the Federal Reserve. So using that data as well as the market, what the market is pricing in. Right now, it's 3 interest rate cuts in 2024. So right now, it's at 5.25 to 5.5. So that would be down to 4.75 by the end of the year.
So it's going to be three
Quarter point reductions, yes. Yes, that's what both the Fed and the market is pricing in.
is that going to have on our market?
All-time highs. Market.
Yeah. So the market went up to all-time highs yesterday. That's,
High, I think, today, too.
yes. So it's really in line with expectations, let's say. It's when something unexpected happens that really you see a significant change in the market, up or down.
Now, the upcoming election, is that going to have an effect on the market, I guess?
Yes. So what happens historically is that no matter which side you're on, which side comes out. Well, of course. But what I want to lay out is more volatility. So the market doesn't like unknowns. So the more unknown there is, the greater the expected volatility. So I think if the market goes according to history, you could probably expect a higher degree of volatility towards the end of the third quarter and beginning of the fourth quarter. Now, I say volatility, that doesn't really lay out one direction or another. So in terms of actionable intelligence that you can use to say, oh, we're going to invest this way to make money, I'm not sure there's a whole lot out there. But you should expect a greater degree of volatility as we get closer to November.
Is there somebody that you recommend?
Someone I recommend reading to understand the volatility? Well, the information that I just mentioned, that really, oh. What is the question? Why do?
We recommend that you continue to be diversified in your asset allocation, rebalance close back to your targets to control risk in the portfolio.
Tim's a better listener. Sorry about that. No. We're all good. Any more questions?
I had a question to just step back. I was discussing with the chief deputy around the reporting that you have, just that it does roll up everything that's in our private equity portfolio as well as what's in the emerging managers portfolio. And if I'm understanding right, so that would largely be on the private equity side. We see that in the private equity composite, the life
Yes.
settlements, the hedge, is that where the hedge fund composite falls in there? Or does that fall under the emerging? And then the emergings are all marked with that
Right.
EMW.
That one is not marked, and we did have a conversation about that particular fund. Yes, it should be marked differently.
Okay.
and go into another bucket.
Okay.
Regarding the private equity, I didn't hit all of pages 6, 7, et cetera, that lay out the individual managers. To speak to your point, if you look at the individual line items, that it includes what we would refer to as your core portfolio, about 70% of the portfolio. That's what we're primarily looking at in terms of individual managers. That includes, as line items, the emerging managers, and then the private equity line item is where labeled private equity composite. That really includes everything that you'll see in Ed's report. So that's approximately 60 different managers.
Okay, and for other clients, do you report any additional information on private equity that's not under like your purview, or is this typical to just see it all like compiled into one line?
This is a monthly flash report.
Okay.
The quarterly reporting package that we currently give the county does include more detailed information. So it would break out those underlying investments, give some summary information, but it does not go into as deep as asset strategies reporting does.
Oh, thank you.
Chris,
In its current
too many
format, right?
managers?
I'm sorry?
Do you think we have too many managers?
That's a great question. Well, I will be brief. You have essentially 3 different programs. You have the core that has about 70% of your assets and approximately 20 managers. I believe that's a well-diversified program, and 20 managers in that program is appropriate. You have an emerging manager program with about a dozen managers in it, and for the emerging manager program, I believe 12 managers approximately is appropriate. In private equity, you have about 60 managers, and if you have a private equity program that has individual managers, direct investments into private equity like you do, and it's built out over decades, 60 managers is an appropriate number. So when it comes, and I'm glad you asked the question, when it comes to the number of managers, part of the reason that there's so many managers in the portfolio is because you have a private equity program. Now, that goes hand in hand with having a private equity program. So the decision is, if you want the 3 programs as you have them, you have an appropriate number of managers.
So does that happen a lot, or is that making it better for the fund?
Well, we believe that private equity, when I bring forth the asset allocation study, private equity can add value to a portfolio over the long term. Private equity is a very long-term illiquid investment. So the the largest reason that you have as many managers as you do in your portfolio is that private equity program. I believe, and we as a firm believe, private equity can add value.
And it's on the transcript if we need to read it again.
Thanks.
All right.
Did you all have anything else, or?
No, that
you so
is all that we have prepared.
Great. Yeah, thank you, Chris and Tim. Let's see, next we have Ed Boyer from Asset Strategy.
Hello. Good afternoon. Just a follow-up on Ted's point and what Chris was referring to about the number of managers. Part of the way in which the plan was developed is that the asset allocation changed, over the last 12 or so years, that when we came on board, the private equity allocation, I think, was 10%. Then it went up to maybe 12. Then it went up again. Then it went up again, and then it went up again. So there's been at least 4 steps, if not 5 steps, increases in the private equity program. So that's one of the key reasons why there's so many managers, and that increased the diversification of style. Vintage year diversification is really important in the private equity world. So
they're all earning their keep, and they're all doing well.
Well, not all of them are doing as well as we would like. Some of that, about 25% of the portfolio was already committed to when we arrived. Okay? Then, we've made another set of allocations, and that's probably along the lines of another 50%, and then the other 25, came in from the committee members, the board, et cetera, along the way. But we can't, as you know, we can't sell them, and we're bearing with it.
If we sell them, we're going to lose, right?
Well, they'll sell them at a discount for sure. All right. Just referring back to the Monday meeting where we discussed the net capital calls and distributions, the managers provided us with the data of somewhere on the lines of capital calls being about 6 million, distributions being possibly 18 million. I think it really depends, again, on interest rates. Chris expressed a good point of view about where the markets are and the Fed and so forth. The headline I picked up this morning when I opened up my iPad was Vanguard thinks there'll be no rate increases or decreases this year. So not to be ignored. I mean, Vanguard's a serious source, so we're monitoring the situation. If rates go down, the activity both on the capital calls and on the distributions will increase as the market will thaw and have more activity overall. Any questions? Okay, so in your board package, there's 2 items that we presented. We won't touch on the public market equivalents because we touched on that Monday. I'd be happy to answer any questions if you have any. I would go otherwise to the other piece that is entitled Private Equity Market Investment Overview, and that lists all the managers, the commitments, what's the call ratio, et cetera. And I think the key takeaway from this is that there are 2 managers that are most likely to have most of the calls, and that would be iNetworks and Magarac. And the distributions will be more diversified from multiple managers, but I think also in that communication with iNetworks last night and this morning, they've got a lot in the pipeline where they have LOIs, and with those letter of intents, if they go to the closing, there'll be a fair amount coming back from iNetworks. The others are all just subject to the, finding the right bid and ask on the transaction, whether it's private equity or venture capital. But I think that process is stalling again, and we'll see later in the year more activity. Your valuation at the moment is $188,000, and that's different than what you might see on the custodial platform, where this is updated with calls and realizations already that the custodial platform doesn't pick up on a interim monthly basis. Any questions?
Any questions? I don't have any. Thank you.
Okay, thank you very much.
Turn on. And Perry Giovanelli from PFM, did you have anything you wanted to share today? Were there any? Okay, thank you. For new business, an update from the RFP committee.
Thank you. The next committee meeting is scheduled for April 3rd, and I believe Walt circulated the draft RFP to all committee members.
Thank you. Any questions? Any other topics? All right, can I have a motion to adjourn? All right, we're adjourned. Thank you.
Thank you.